Hey guys, welcome back to another video. If you're new to my channel, my name's Jake. On this channel we talk about finance and investing issues, and today we got to talk about the stock market, and it's at all-time highs. The NASDAQ all-time highs, the S&P, the Dow. It's crazy what's going on, and it has a lot of people confused. And in this video, I'm going to make a prediction, and I know that this can get me in trouble down the road, but I actually think the S&P 500 will continue going up. That most likely is going to hit 4,000 before the end of the year. And 4,000, wow, that would be a huge increase from the current value of 3,500. This is the closing as of Friday, and it's been up massive since the lows in March. I think it hit close to 2,300, and it's up to 3,500. So what would it take to get a 13% increase or another 500 points to get to 4,000? It's actually not that much. It's gone up 500. It was at 3,000 just 2 months ago. So on June 26th. So to go up another 500 points, it's actually proportionally not that much compared to what it's done the last 6 months. And before we cover why it's going to continue going up, we should first understand what exactly is the stock market or the S&P 500. S&P stands for Standard & Poor's. It's a rating agency. And the S&P 500 number, the physical number, is just the aggregate collective amount of the market cap share of the 500 largest companies in America. Some people don't know this, but that number, 3,500, actually stands for $35 trillion. So the 3 and the 5, that is the trillion placeholder. So, for example, Apple has a market cap of now over $2 trillion. It's America's largest company. So all you got to do is do 2 divided by 35, and you'll get 5.7%. Apple is worth 5.7% of the S&P 500. So if you're in an index fund, congrats, 5.7% of your index fund is owning shares of Apple. And on the most fundamental level, we need to understand what exactly is the stock market. It's kind of like a reservoir for value. It's not a bank account, savings account, or like there's not $35 trillion worth of cash just laying somewhere waiting for you to take it out. The share price of a company is the last agreed upon dollar amount between a buyer and a seller. It's a one-to-one transaction for a share of a company. There has to be a seller and there has to be a buyer in order for the share price of a company to move. So let's pretend that everybody who owned US equities wanted to sell their stocks on the same day. This would cause the value of the stock market to go to zero. If there's no buyers and everybody wanted to sell no matter what, that would cause the stock market to go down. So what's happening here with the stock market increasing is there's more demand on buying than there is on selling. If more people wanted to sell, then the stock market would cool off, but more people right now are wanting to buy, which is what's driving up share prices. And a theme of this video is that the stock market is not the economy. These are two different things, and we're going to cover exactly why. And let's start with the bad. There's a lot of bad news out there. First of all, the unemployment rate from the April high has been going down, but it's still over 10%. That's higher than the Great Recession in 2008, 2009. You got to go all the way back to the Great Depression before you see unemployment levels. It peaked at 14.7. It is going down. Hopefully it will continue going down, but these are still really high numbers. Additionally, there's a lot of small businesses just getting completely wiped out right now. 7.5 million small businesses are at risk of closing due to the pandemic. And this does not reflect in the stock market. The stock market is only publicly traded companies. The S&P 500 is only the 500 largest companies, but there are tens of millions of small businesses out there, and those are the ones who are being hurt the most, struggling the most. Additionally, we're in the middle of a housing crisis. A third of Americans missed their July housing payments. This is both mortgage payments and rent payments. What is 30% of Americans? I'm assuming this is, or 30% of US households. So this is something like over 80 million Americans are not paying their rent or mortgage right now. As soon as the forbearance period ends, we're going to have an eviction and a homelessness crisis in America. So why? Why is the stock market continually going up, and why do I think it's going to hit 4,000 before the end of the year? And the reason is people have more money than what they know what to do with. And I'm not talking about people like you or me. I'm talking about the investor class, the wealthiest of the wealthiest Americans. 1% of Americans own 50% of stocks held in America. And this article is actually from a year and a half ago. I'm sure with the pandemic and the stimulus, probably the richest 1% own 60 or maybe closer to 65% of the total stock market. So whenever your IRA or 401k goes up in value, you get really excited. I get excited, but it's peanuts. It's rounding errors compared to the multimillionaires and billionaires who own real investments in the stock market. And these are the 12 largest financial institutions in America. These are their assets under management in billions. So BlackRock is the largest. They own close to $7 trillion in investments under management. And all of these numbers are kind of dated. They're from a year or two ago. So I'm sure with the explosion in the stock market, these are all much higher. But I'm pretty confident that the executives at all these banks have already figured out what's going on. And they are not advising, they are not managing their clients' wealth by getting out of the stock market. They're staying in, and people continuously are buying in. And let's just cover why. And the reason why, first off, everyone knows Congress passed the CARES Act. This was almost $3 trillion in spending. They had an additional couple $100 billion for additional PPP loans. And yeah, this is just a huge injection of into the economy. And this is what was supposed to happen. This was the intent. But what else has been going on? Currently, all student loans are in a grace period where people don't have to make payments and they're not paying any interest on their outstanding balance. How long this will hold, I don't know. But collectively, student debt in America is $1.6 trillion. And there are a lot of small dollar retail investors currently buying into this market with zero commission fee brokerage accounts like Robinhood, Webull, Charles Schwab. I love how the revolution in brokerage accounts has democratized the stock market, but there's a lot of people who should be paying their student loans or would be paying their student loans, but instead are probably investing on their Robinhood account. Additionally, Americans aren't traveling. Traveling is something that wealthier people, middle-class people, love to do. I love to do it. But they can't go anywhere because of what's going on with the pandemic. We can't travel. There's a lot of industries, the cruise lines, the airlines, the casinos, the hotels, that are getting completely wiped out right now because tourism and traveling can't happen. So people who would be spending money on this otherwise are probably investing it instead. And all those other factors are important, but the biggest one, obviously, is the Federal Reserve and the actions they've taken. When you look at their balance sheets, they've injected almost $9 trillion into the economy. They've done this through several ways. The first one is they've bought up the corporate bond market. Normally, when corporations need to issue debt, they have to, maybe if they're a riskier company, offer a higher interest rate or put up assets as collateral in case they default. With the Federal Reserve is saying, nope, you don't need to do that. We're just going to give everybody favorable loans under good conditions and, hopefully you can pay it back. Additionally, the Federal Reserve has lowered their interest rate to 0, which is causing a lot of people to refinance their mortgages or refinance personal debt at a lower interest rate, therefore saving them money, therefore giving them more money to invest in the stock market. And there definitely is arguments for and against the Federal Reserve buying up the bond markets. It's really kind of strange, but they've been offering bonds to successful, profitable companies like Microsoft, Apple, Home Depot. And if these companies that are already doing well can get favorable loans from the Federal Reserve, then they don't need to issue new shares in order to raise capital. There's two ways that a company can raise money. It can either issue debts in the form of bonds, or it can issue new company stock, and that would cause the share price to lower as they're issuing millions of new shares or whatever. These companies aren't doing that because the Federal Reserve is just guaranteeing them money. And with the federal interest rate going to 0, this is causing Treasury yields to be very anemic. They're under 1% currently for a 10-year Treasury note. And when this happens, when dividend yields from holding company stock is greater than U.S. Treasury yields, then people who own a lot of assets and wealth would rather be in the stock market, hoping that the share price of their company can just maintain its value. If you can get a dividend payout from a company that's 2 or 3%, then why would you hold money in U.S. Treasuries when that's only averaging you 0.5, 0.6%? So there's a lot of people who would be happy to just beat inflation by holding U.S. Treasuries who are jumping into the stock market because the dividend payouts for certain companies are just more appealing than government bonds. So with the U.S. economy being flooded by stimulus money and Federal Reserve quantitative easing, money is going everywhere. And where do people traditionally put their money? Most people would love to put it in real estate. They'd like to buy a home or property. However, housing prices have skyrocketed. They're at all-time highs. And once again, this is a supply and demand issue. There's a lot of people who would otherwise sell or move that because of the pandemic, they're not doing that right now. Additionally, because most people who are not paying their mortgage are they're being forbearance or a grace period or an extension, they're not being evicted right now. Evictions kind of need to happen in order for the real estate market to equalize. And because evictions have been put on hold, there's not really any good deals for buying real estate right now. Same thing with precious metals. You can look at the price of gold and silver right now. Normally, this is supposed to be a counterweight to the stock market. When consumer confidence in U.S. equities goes down, precious metals are supposed to go up. They're both going up at the same time, which doesn't make a lot of sense. So putting your money into gold or silver right now probably isn't the best bet. Same thing with cryptocurrency. This is kind of, a relatively new technology or investment. However, they also are, it's not quite to all-time highs, but it has gone up significantly this year. And it's because people think that cryptocurrency is a hedge against inflation, the devaluation of the dollar. But once again, stock market, gold, silver, Bitcoin, everything is going up. So let's think about this. If you have money, where can your money go? If you're significantly wealthy, you can either buy government bonds, corporate bonds, real estate, gold, crypto, or the stock market. And between all of these right now, the stock market actually does look the most appealing. And there's there's probably numerous reasons why. One of them would be there is a revolution happening in the business world where people are transitioning to working from home. This was kind of happening anyways, as we move towards a digital economy. The pandemic just sped it up. So there's a lot of money being spent by companies and individuals to basically turn their homes into offices. So if you're a company in cybersecurity or cloud storage, your sales are actually through the roof. These companies are an attractive buy right now because the valuation is there. Same thing with small businesses getting wiped out. Every time a mom and pop store closes, this helps the big retail stores. So if you look at the sales reports for Home Depot, Target, Lowe's, Walmart, Amazon, Sherwin-Williams, their valuations actually might be justified because as people are changing their spending habits away from small businesses to these large corporations, the profit is actually there. So how does this all end? How is this going to play out over the next year or two? I can't guarantee you anything, but this is what I personally think is going to happen. Once again, I am not a financial advisor. This is not financial advice. But the first threat will be inflation. This is already happening. As the price of everything is going up and everybody is paying more for the same thing, it causes inflation. The only way that the Federal Reserve can control this is to raise interest rates. Once they start raising interest rates, the cost of borrowing money will become more expensive. The yields on Treasury notes will also finally go up again. The Federal Reserve can only keep interest rates at zero for so long before they have to just incrementally start increasing it in order to control inflation. But I think the real catalyst for slowing down the stock market or even reversing it, causing a crash, will be the coming housing crisis. If people don't have jobs and they're not earning income and they can't pay their mortgage, evictions and foreclosures on mortgages will have to resume. They'll have to continue. And when will this happen? At some point, the governments or state governments are going to have to say, okay, mortgage foreclosures and evictions have to resume. At this point, buying real estate will look more attractive. When you look at the total value of America's real estate market, it's about $27 trillion. The stock market is currently at 35, so it's just a coincidence that they're close to each other in value. The real estate market really is the second largest reservoir for value or wealth amongst Americans. So as soon as people start losing their homes, and this is a tragedy, I don't want this to happen, I'm just saying it's a natural outcome of our capitalist economy. Once people start losing their homes, buying real estate will finally become a better deal or more attractive for investors. So we can think about, how is the money going to flow? Next year, 6 months, 2 years, I don't know. Eventually, the Federal Reserve will stop buying corporate bonds, and this will allow private investors to negotiate better interest rates, more favorable terms for issuing corporate debt. They'll have to raise interest rates, which will increase the yields on government bonds and make holding government debt more attractive. And once people start selling their homes or losing their homes, it's going to make real estate more attractive. When that day comes, people are going to be selling their gold, they're going to be selling their crypto, and they're going to be selling their stocks in order to get that cold hard cash to get it into one of these three areas that have become depressed or artificially inflated by the government. And ultimately, I don't see the political landscape of our country changing in the next 6 months. I think until the vaccine is rolled out, politically, legally, we can't go back to business as normal. So I think stimulus will continue, quantitative easing will continue, and protecting renters and homeowners will continue until we can politically say, all right, time to go back to normal. So in my opinion, yeah, the stock market is the best place that people are going to continue hiding their money in order to protect it from inflation. So I don't see anything changing anytime soon. And realistically, yeah, I'm going to go ahead and say the S&P 500 is going to make it to 4,000 before the end of the year. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, leave me a comment or question down below if you have any. And if you haven't already subscribed, consider subscribing to my channel. I talk about finance and investing. And until the next video, take care.